But quickly moving on, we have Amit Kumar Sinha, MD and CEO, Mahindra Lifespace is with us. Let me first ask you, sir, the residential pre-sales have declined both sequentially as well as year on year. Most peers are reporting a good jump. So why? Have launches slowed down? What's the pre-sales target for FY24?
We have given a guidance of 2,500 crore pre-sale for FY25. Not for F24, but F25. And we are sticking to that guidance for now. With respect to F24, we were expecting one launch that got delayed because of some regulatory changes, which will happen in a subsequent quarter. While this quarter shows a little bit of a smaller increase or smaller pre-sales, but we'll make it up in the later part of it.
Right, Mr. Sinha, good morning, and this is Vinny joining in the conversation as well. What I also want to know is, you have a very aggressive target of 5x growth over the next 5 years. Are you confident of achieving this guidance? What is driving this confidence that you have right now?
Yeah, so three parts. I'm glad you asked the question. As you know, we have been in the real estate business for quite some time, industrial as well as residential. We have seen a lot of success over the last 2 years, especially in the residential launches, giving us a lot of confidence in our ability to scale up. So 3 reasons we believe we are ready for the next stage of scale up. First is overall market buoyancy. We see the real estate cycle turning for the right reason, and it will continue to be strong for the next several years. In fact, within the real estate cycle, we find that there is a flight towards quality developers, and we hope to benefit from. That's the market is very supportive for us. The second part is Mahindra and Mahindra as a group is solidly behind us. They have committed support. I used to be in the M&M side. I used to head the strategy function for the group. And Mahindra is solidly behind us. That gives a lot of confidence that with the might of the group, we'll be able to push our aspirations to the next level. And finally, we have seen the 5x is something that many of our peers have achieved. And we feel that given the strength that we have, the capabilities we have built over the last few years, 5x is going to be possible. In fact, if you look at the market share of most of the organized players, the largest player is 5 to 6%. We are less than 2% across all our portfolio, across all the markets as part of the organized players. So there's a huge headroom for growth for organized players to take share away from unorganized players, and 10K would not be a big task if we execute it.
Right. And, on the revenue recognition front, it had improved over the last couple of quarters, but again, it's taken a bit of a hit, if I can call it, in Q1. What's been the setback? Is it executions, deliveries, how should one expect revenue recognition to pan out going forward?
Yeah, so, the revenue recognition is a tricky one in this business, as you know. We can't recognize revenue until we have an OC in hand. It's dictated by some of the approvals. 2 of the approvals slipped from Q1 to Q2 this year. That's why you're seeing a little bit of a low revenue in the Q1 of financial year 2024. However, we're quite confident that that's a question of just small delay. We'll make it up in the subsequent quarters. And we continue to be robustly behind what we have expected for the rest of the year in terms of the revenue.
Right. Also, just want to know is what is the kind of inventory you have on hand? What is the launch pipeline you are targeting for the rest of the year, and the sales potential as well?
Yeah. So we have in the last quarter, I announced for this financial year, we have 9 launches that are planned. These 9 launches in total add up to roughly 4,000 crore of GDV, as we call it, been spread across a few years. It's not all inventory available the same year. 4,000 crore would be launched through the launches this year. We also have roughly 2,000 crore worth of inventory within some project that has been launched in the past year. If almost 40 to 50% would be a target for us to be sold.
Right, and if I may ask, how is the IC and IC segment performance shaping up for you? How material could this be going ahead?
So just a little bit of background for the IC and IT. It's integrated city and industrial cluster, and it covers some of the locations that I mentioned in the previous comment. It has Chennai, Jaipur, Ahmedabad, Goa, and Mumbai. In the previous year, F23, we had one of the best years. We had 456 crore of sales from an IC and IC segment. This year, we continue to have strong pipeline across all the very well-developed locations like Chennai and Jaipur. This is a lumpy business, as we know. It takes some time to close. So the current quarter saw a small sales, but we have a very healthy pipeline. We have to work hard and work closely with our customer clients to convert that into business for us. And many of the LOIs, expression of interest, have been signed with us. We are doing the due diligence. They are doing the due diligence and we support.
Okay, Mr. Sinha, thank you so much for joining in with us this morning on EG, now giving us an understanding on what we should be expecting from the company going forward as well.